We needed someone to help us do more than just get our income statements out, but really to understand them and make sure we're doing them right. I would say the strategy was to go find what we're doing that we aren't doing that we should. And I think that was probably the revenue recognition with the work in progress reporting was a big deal of stabilizing and evening out the income and the expense. Without those two being in the same period, you have massive fluctuations in profitability from a month to month basis. And it's really, really hard for anybody to rely on that on a long-term basis. And so that was the evening out of the revenue and the expense category into an earned revenue recognition model was the biggest thing, I would say.
With the banks, and specifically in the construction industry that Sloan operates in, with the banks and the bonding company, they need to be able to have a snapshot of the financial health of the company at any given time based on what projects they're reacting to. We worked to increase the line of credit quite a bit to do a large project for Apple. And then the bonding company was an ongoing thing because they had several projects that had to be bonded. And there's a lot of risk in the bonding process. So the more you can prove that you have your act together and that you know what you're doing and you can prove that you have a profitable company, the better the outcome's going to be for the company.